Good afternoon, my friends. Has the shift already begun? Is the pendulum starting to swing already from seller's market to buyer's market? We will do a deep dive into the stats today in this month's edition of the Vantage Report. My name is AJ Hazy, and I am coming to you live from the Vantage West office in the metaverse. Actually, no, this is just a bad Zoom background that I've got because I am currently out of town. So no studio for me today, no fancy graphics, but still the same great stats and the same great analysis and research that you've come to depend on. So let's dive in. Let's talk about what is happening. Q1 is now in the history books. We have a pile of data to sort through, and I'm going to help you make sense of what's going on in this crazy market. So starting with sales, we have had 1,675 sales so far in Q1, which is down 29% from this time last year. So definitely fewer sales. Now, when you're looking at it on a month-to-month basis, it's an interesting trend. In January, we were about 2% off the pace of 2021. When we got into February, we found ourselves 18% off pace. And now that we're in March, we find ourselves 39% off pace when you compare month to month. And so we're definitely seeing a trend where the gap is widening between the amount of sales volume there was this time last year. Now, at the same time, for the quarter, the overall dollar volume is almost the same, right around $1.5 billion. So the amount of economic stimulation remains the same, despite the fact that there are much fewer units trading hands. Now, the average sale price of a transaction, not the benchmark single family, which we'll get into in a minute, but the average sale price is up considerably. We are seeing now that the average consumer is spending $919,000 on a piece of real estate. That's up from $702,000. So that is a 24% increase from this time last year. So pretty massive jump there. That is being driven by huge spikes in the single family market, which is definitely stealing the show. The benchmark single family up 25%, now 1.129. That's the average home. Your average 4-bedroom, 3-bath, 2,500 square foot home is now clearing 1.1 million. Going back to the average transaction, that is for a 3-bedroom, 3-bath, roughly 1,800 square foot home. So you can see a lot of dollars trading hands, and this is due to just an inflationary period of time that we're going through. We're printing all kinds of cash, increasing the currency supply. So of course, this money finds its way into all things. Have you been to the gas station lately? But real estate remains a great hedge in an inflationary time. So now let's talk about active inventory. We have currently 1,231 listings for sale on the MLS. So compared to this time last year, we're about 14% less, as we were carrying about 1,400 listings this time last year. But what's notable is the trend. As we got into Q2 of last year, listings were dropping. We were going from high 1,400s down into the high 1,300s. What we're seeing is the opposite this year, where listing inventory is climbing while sales are decreasing. So we know that we've reached an inflection point in the market. As last month, we had about 950 listings, where we now have, like I said, 1,231. So that increase is coming, and it's an inversion of what happened last year, where listings were coming down as we headed into summer. This year, they're heading up, and sales were heading up last year. This year, they're heading down. So definitely we've got an inversion, and I think that is the tipping point where we start to see the market slowly softening as time goes on. And we're hearing this already from our colleagues, that homes that people thought were going to go into multiple offers suddenly aren't. People were doing we're going to withhold offers until Monday. Lo and behold, on Monday, there wasn't a feeding frenzy. And so we're seeing a slight return to normalcy. Now, having said that, we've seen some really, really insane sales. We had a sale that sold for 1.4 over its list price. We've had multiple sales that have gone for as much as 20 to 25% more than our list price. And so the anomalies are certainly happening, but they're becoming less and less frequent. What else is going on? Let's see here. We've got, and this is being driven by rates. I just got off the phone with Av Hundal, our mortgage professional from Lend Boomerang, and he was sharing with me some interesting comparisons from this time last year. So we all know that prime rate went up, and they're threatening to raise it by another 50 basis points again. And so, prime rate has only had a 35 basis point jump at this point. It's currently sitting at 2.7. This time last year is at 2.45. But that's not the whole story. That's only a 10% change. If you look at the 5-year variable, last year you could get a variable around 1.65. And this year you're looking at about 2.05. So that's about a 20% change in terms of the cost of funds on a variable. But even more interesting than that, when you look at the fixed, and the 5-year fixed is really, as they start to predict the future, that spread has gone crazy. The same time last year, you could get a 5-year fixed about 1.79. Now you're looking at high threes. So there's a 200 basis point shift, which is over 50% change in the cost of funds on a 5-year fixed. And so in talking with Ab, his advice is still very much to go with the variable, but watching rates, it is interesting to see how things are priced and how these prices combined with the obviously higher average purchase price is affecting the affordability, which is a big part of why the market seems to be slowing down ever so slightly. Always with an overheated market, eventually price cannibalizes the interest and cannibalizes the demand. And so we're starting to see signs of that right now. So as far as the absorption rate is concerned, we are currently sitting at 1.85 months of inventory, which means that you're still going to see upward pressure on price. Last month alone, we saw the benchmark single family house go up by 3.2%, and it is up 34% overall year over year. So that is a massive, massive change in benchmark price. And there is probably going to be some additional price increases over the next little while. So depending on your time horizon, I don't think as a buyer, it makes sense to wait 2, 3, 6 months even, as I think likely that prices will be higher, because until we see inventory cross over 6 months of inventory, which should take at least another 3 to 6 months to happen if it aggressively swings. And even then prices won't come down for some time. So then you have to also weigh that against the cost of borrowing, because truly you live in the payment, not the price of the home, especially if your time horizon is longer to live in the home. You really want to make sure that from an affordability standpoint, rates are probably as low as they're going to be for a while. And right now, prices are probably lower than where they will peak. Now, what we're sharing with sellers is that if you are looking to maximize the sale of your home, the selling conditions probably don't get any better than this. March, April, and May are the very best months to sell in. And given that we're already seeing signs of a slight softening, now would be the opportune time to exit. Now, we'll never know the top of the market until it's in the rearview mirror. So don't get too excited trying to time the market. Don't try to be too clever. This is a wonderful time to be a seller. And then, of course, you can take all kinds of time to make your next move. We've got some great programs for that, like our sell and stay and our buy before you sell program. So give us a call and check into that. What else can I share with you? Sales over $2 million is definitely a headline. We're seeing a lot more. It could just be that executive homes now have pushed over 2 million, where that used to be the luxury sector. Now it's the executive sector. But we have seen an increase of 46% year over year. The only real exciting headline, I suppose, when it comes to sales numbers is in the stuff over 2 million. We've had 72 sales versus this time last year, there were 39 sales. So that's pretty exciting in the luxury sector. And also noticing in the rental market, because we do manage about a $1.5 million a month rent roll. So we've got some pretty good data on that to share. We're seeing that the average rent has stabilized right around $2,000 a month. And it's up a little bit from this time last year, but the trend seems to be that it's stabilized. We've come through the market, there's healthy demand, but also there's a little bit of resistance or a little bit of tenant fatigue where they're pushing back on some of the pricing now. So we're seeing prices, what I believe are going to stabilize in both the rental market and the sales market for the time being. Well, there you have it, folks. There's your update. Hope you found that super helpful. And if you're curious about what your home might sell for in today's market, you can start that process right here on the blog. And if you're interested in poking around to see what homes are available, there's more and more inventory coming on every day. You can start that process from right here on the blog as well. Thanks so much for watching, and we'll see you in a couple of weeks.